Ladies and gentlemen, good day and welcome to JK Lakshmi Cement quarter and 9 months year ended 31st December 2024 earnings conference call hosted by PhillipCapital India Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. I now hand the conference over to Mr. Vaibhav Agarwal from PhillipCapital India Private Limited. Thank you, and over to you, Mr. Agarwal.
Yeah, thank you, Michelle. Good evening, everyone. On behalf of PhillipCapital India Private Limited, we welcome you to the Q3 and 9-month FY25 call of JK Lakshmi Cement Limited. I need to highlight that JK Lakshmi Cement is also the holding company of its listed entity, Udaipur Cement Works Limited, and therefore this call is also open for discussion about the performance of Udaipur Cement Works Limited. On the call, we have with us Mr. Arun Kumar Shukla, President and Director, and Mr. Sudhir Bidkar, CFO at JK Lakshmi Cement. I would like to mention on behalf of JK Lakshmi Cement and its management that certain statements that may be made or discussed on this conference call may be forward-looking statements related to future developments and which are based on current expectations. These statements are subject to a number of risks, uncertainties, and other important factors which may cause actual developments and results to differ materially from the statements made. The JK Lakshmi Cement Limited and the management of the company has no obligation to publicly alter or update these forward-looking statements, whether as a result of new information or future events or otherwise. I will now hand over the floor to the manager of JK Lakshmi Cement for their opening remarks, which will be followed by interactive Q&A. Thank you, and over to you, sir.
Yeah, Vaibhav, thank you, and good evening to all of you. Thanks for attending this call. Though you have already seen the result, but I'll just give you a very brief, update on the industry as such and our view on that. So, last quarter from December, demand has started improving. So, demand is good in our operating markets, and so is the prices also are improving. Going forward, what I see, what we at JK Lakshmi that this year the growth is going to be around 4 to 5%, somewhere around that, and next year FY26 may be around 6 to 7%. That is what we see. All those, maybe because of the delayed capex release, all those, pent-up demand is likely to come in next financial year. But we definitely see that next year is going to be good in terms of overall demand, and also I think prices also will be better than what we have witnessed in this year, particularly during quarter 2, right? JK Lakshmi Cement, we are still, focused on how we are going to improve our efficiencies in different part of our operations, and that we keep on working on that. Our focus is also there on renewable energy. So we are improving our renewable energy proportion in our overall energy requirements. So last quarter it was at 48%. Distribution also, we are very focused as to where we operate and where we are going to sell. And that reflects in our lead in different quarters which we have achieved. Last quarter also it was similar to the quarter 2, right? And on top line, supply chain and operational efficiency, that continuous endeavor is there to be amongst the best companies in terms of efficiency, right? So this is what I think a very brief update. I think result you must have seen. We are open for questions, and maybe during that answering those questions we'll have further conversation on some of the aspects which you want to know. Thank you so much.
Thank you very much, sir. We will now begin with the question and answer session. Anyone who wishes to ask questions may press star and 1 on their touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. You may please press star and 1 to ask questions. The first question is from the line of Praveen from Anandam Enterprises. Please go ahead.
Hi, ma'am. Thank you for the opportunity. My question is regarding conveyor belt. What is the current status of conveyor belt at Durg plant, and what is the expected timeline to complete this project?
Yeah. So the status, this is on the final stages of approval. All right. So you know that taking lease from the PSUs or the government is little bit tedious. So we are trying for that, and hopefully during this current quarter we'll be able to accomplish this approval.
Could you give me any approximately timeline?
Very difficult, because this is these are the things which is not perfectly in our control, right? But as I said, that this is on the final stages of approval, so any time we may get it, but it's very difficult to give a timeline for it.
Okay, sir, that's all from my side. Thank you.
Thank you. You may press star and one to ask questions. The next question is from the line of Mangesh Bharang from Centrum Broking. Please go ahead.
Hi, good afternoon, sir. So my question is on the volume growth. You mentioned that December onwards volume has picked up, and we have commissioned the Udaipur unit a while back, but we have not seen too much of a volume uptick from there. So just wanted to understand from you, what kind of volume growth can we envisage in FY26, and when can we see optimum utilization of the Udaipur unit? Thanks.
So Udaipur Cement Works, I think we are going as per the plan only in terms of volume ramp up. So last quarter, if you look at the capacity utilization was 57% along with the new unit, right, which is as per the plan which we had laid out. Going forward, definitely we see, as I said, that next year is going to be good in terms of demand. So we'll achieve somewhere around 65% of capacity utilization in FY26. For Udaipur, right?
Sir, so that means have we slowed down the production from other units just because Udaipur has come up, and because of which it is not getting reflected in the volume growth?
I'm not so clear. Can you repeat this once?
Sir, I'm saying, we are operating at almost, you said, 45% from Udaipur right now, which was not there last year, but still we are showing growth of, say, 2-3% on volume. So is it that the production from the other units that we had has slowed down?
No. I think more or less, if you look at only JK Lakshmi cement utilization is about 78%, right, and overall is 68%. Okay, so October, December, as I said, that December onward demand has started improving. November was also quite sluggish, right? So if you look at overall capacity utilization of the industry also, I think we are little better than others. Okay, so overall at about 68-69%, Udaipur alone at 57%, and JK Lakshmi at 78% is to my mind is really okay, in line with what others are doing.
Okay, thanks. Sir, one more question was on the capex for next year. What could be that number?
Yeah.
Capex, we expect next year to be about, as I mentioned in my last call also, this year in 9 months period we have already done about 250 crores. Another 100 may come in the current quarter, and then thereafter about 1,000 and in the next FY26 and about 1,500 FY27.
Okay, sir, I will come back in the queue. Thanks, sir.
Thank you. You may press star and one to ask questions. The next question is from the line of Rajesh Ravi from HDFC Securities. Please go ahead.
Hi, sir. Good evening. First, could you share the numbers, like what was the blended cement and trade share and premium sales in this quarter?
Blended cement was at 65%, trade proportion was 58%.
Okay, and premium sale and fuel cost?
Premium sale on an overall volume basis, total trade non-trade put together was at 11%, and fuel was at 1.57 per 1,000 kilograms.
157, okay. And lead distance?
Sorry?
Lead distance, AFR and CC ratio?
381 was the lead, right?
Sorry, how much? 380.
81 kilometers.
381, okay. And AFR?
AFR, I think we have a different unit, we have different, AFR. So, at Sirohi, we are at 14.
At Sirohi 14, overall it is 11%.
Overall, it is 11%. Sirohi is at the highest at 14%.
Okay. And sir, the CC ratio would be how much for Q3?
Sorry?
Cement to clinker ratio?
It's 1.45.
And sir, these numbers you share is on a console basis. Is this understanding right?
It is also the same, the figure which we are telling you is control.
Console only, no? Okay.
Still, unless you, ask very specific about different companies, I think otherwise we mention only console.
Wait, that is okay, sir. That is what I'm saying. It is all console only, no? Because that is how one should look at this company.
Yeah. I think
and Udaipur, how much was the volume sold in Udaipur, sir? For the corresponding volumes for Udaipur?
So, Udaipur volume was at 8.3.
This is total sales from Udaipur, okay.
Yeah.
Okay. So, is it fair like Udaipur has driven most of the volume growth in this quarter?
Yes. You are right.
And sir, what is, you mentioned that the 9 months we have done just 250 crore capex and another 100 crore capex. So, are we running very short in terms of this is the total capex size which we have spent, including maintenance and all, 250 crore?
Yeah, you're right.
Okay. So, is this as per the plan, or are there any slowdown, deferment which you are witnessing here?
No, there's no slowdown or deferment which we are witnessing.
Okay. And the phase 1 railway siding is already operational, east?
Yeah.
Okay. And lastly, in terms of the cost reduction programs, how much we have achieved and how much more we are looking at tangibly over next 1 year, say by FY26 end?
So, I think this improvement or cost efficiency is a ongoing process. Plan we had, I think, more or less, we have achieved, I would say, to the extent of about, 75-80%. One of the major initiative which was pending, from our end, had explained this to you before, that we are working on brand rejuvenation so as to improve our price positioning. Exercise we have initiated from 15th of January, right? So,
okay.
Brand rejuvenation, the idea is to improve price positioning, and perhaps I think that is going to give some, good, benefit in terms of at least improving our price positioning by 80 to 100 rupees a ton, right? So, that is one major, I would say, item which we have worked upon, and perhaps I think that is going to give us benefit going forward. So, this is one. Second, renewable energy front, as I said in my opening remark also, this is one area which we are very focused on based on our corporate responsibility also as to how we are going to be carbon net zero by 2047. So, we are aggressively working on this. So, this is another area which is going to give us benefit. Quantification, I think maybe in next call I'll give you, because some of the things still we are working on. Right? This is which we are working. And third, of course, is further working on supply chain efficiency. See that, after merger of Udaipur and JK Lakshmi, right? So further synergy will come, and that will benefit, to an extent in logistics cost reduction also.
Okay. Yes, so just two. Yeah.
There are other items which we keep on working on: energy, on heat value, on TSR. Of course, I think we have, further room of further improving by a percentage or two with the, capability which we have, right? So that is, we keep on working.
Okay, sir. Two small questions. One is how much was the RMC and non-cement revenue for this quarter? And second, the capex number for FY25 in last call, you had you were targeting 900 crore, 500 crore at standalone, 200 crore at Udaipur, and 200 crore for the Northeast project. Now, which we are talking about is, somewhere
1,000 crore.
sharply lower. Yeah, 350 crore.
RMC revenue was 64 crore last quarter.
And non-cement revenue total?
135.
135 crore. And capex number, which was pegged at 700 crore in Q2 for FY25, why this is reducing to almost half, sir?
It is not reducing to us. It is, I'm saying 1,000 crores for the next year.
No, that is, I agree. For FY25, in last
Exactly.
call, you had contemplated that you would be spending 700 crore. In fact, 900 crore you had guided, 500 crore at the standalone level, and 200 each at Udaipur and Northeast projects.
Yeah.
So what is missing? Where are we going short on the expansions?
Crores is the standalone, and about 300 odd would be, that question was for the standalone. So 500 is standalone,
Okay.
and 300 is for the Udaipur.
So total, how much we are spending for this year?
800.
800 crore. Okay. This explains. Okay. Great, sir. I'll come back in, please. Thank you.
Thank you. You may press star and one to ask questions. The next question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Thank you, sir. Sir, EBITDA margin on non-cement revenue is 5% for this quarter?
No. It is lower than it's at 1%.
Okay, 1% only. Okay, got it. Just to, sir, again, re-clarifying, Concall capex for FY25 is 800 crore, for FY26 is 1,000 odd crore, and for FY27 is how much?
Could be close to about 1,500 crores.
Okay, 1,500 odd crore. Okay, got it. And in terms of the ongoing expansion, so Surat will be starting 1.35 million ton by this March end.
So, as we said before, we are commissioning it in two phases. First phase is going to get commissioned in the month of March itself, or February end, which is about half of the capacity, about 0.8 million ton. And another 0.7 or rest of 0.6 million ton during around June 2025.
Okay. This is getting delayed. So initial we will be maybe 3 to 6 months earlier. The timeline was. So is there any specific reason why we are because this is just already we have a unit and we have to we will be adding there. So why there is a delay in this?
I think first phase was about to be commissioned during this time only. Yes, there is a delay, some delay, right, because of some of the equipments which got delayed in terms of getting supplies at the site. So yes, little bit of delay, but not much, because anyway I think we are hopeful that by this month end or maybe mid of March, I think 0.8 million ton will be up.
Okay, got it. Second, just on the timeline for the Durg clinker and the two phases. So the clinker 2.3 and 1.2 and 1.2 million grinding at Durg and Prayagraj that will be starting by 1H of FY27?
Yes, you are right.
And the second phase of 2.2 million ton grinding units in FY28?
Right.
Okay, and the Northeast one, last time we said 1,800 crore capex expansion, so that will be starting in FY28?
Yeah. It is what
okay,
the timeline we have given as of today.
Yeah. And sir, if you can give us a gross standalone date and consol date and cash also and net date, standalone and consol.
Standalone gross debt is 650 crores, 300 crores of cash, so net is 50 crores on a standalone basis, net debt. On a console basis, gross debt is 2150, 400 is the cash, so 1750 is the net debt on console basis.
1750. Okay. Okay. Got it. Second, so sir, in terms of the currently the prices for our core markets, if we compare with the third quarter average, right now would be higher by how much?
So I would say definitely about 100 rupees, 75 to 100 rupees.
Okay. And for this quarter, fourth quarter at a console level, broadly in terms of industry, I think would be a 6 to 8% kind of a growth likely to see. So for us, in terms of the volume growth in the fourth quarter, would be the similar at console level?
So fourth quarter is, our estimation is likely to grow at about 8%, you are right, 7 to 8%. And we are going to be in alignment with that, right? 8%.
Okay. Okay. And next year at a console level for industry, how you mentioned 6 to 7%. So will we be growing much better, 8 to 10%, or mostly in line with the industry?
So I think we are going to do better because I think we have now Udaipur and Surat also in place. So our growth is going to be better than industry.
Okay. So just a main in terms of the profitability, because we have done a good thing on the costing front for this quarter, decent 350 odd rupees per ton QOQ reduction, and now we are saying that we are looking at a kind of 7,500, 1,800 rupees improvement on the pricing front, what we are trying to achieve, and on the costing front. So is it fair to say that easily we can see a 800, 900 rupees plus kind of a EBITDA per ton on a sustainable basis?
I think you are very quick in calculation. So perhaps I think this is all, see, we are in the market, and the market is always, dynamics, right? So maybe I think why we should limit ourselves to only, 75 to 100. We can go even up to, 200 or maybe 50 also. So I think some amount of, volatility has to be there. So I think I would give a range, So I think you are right. So in that sense.
Okay, got it. But we are not worried given the kind of the incremental supply that will be coming at industry level. So broader calculation is will be 100 million ton plus capacity will be added in 26 and 27. So in terms of the fight, in terms of for the market share, so either is it fair to say that if we can achieve the kind of a market share or maintain, then maybe one has to look at the lower prices and maybe a lower profitability, or it could be a vice versa?
See, if you look at capacity addition for the last maybe post-COVID, you look at, the addition has been about 40 to 45, 50 million ton every year. The capacity addition CAGR is about 6 to 7%. This year is about 7%. If demand is also going to be about 7, 8%, so perhaps whatever capacity utilization we have at the pan India industry level, that is going to be there. So on an overall basis, I think I do not see that is going to be much demand and supply mismatch. It's going to be the same way as it was before. Yes, regional imbalances you may see wherever I think capacity is going to get added more, right? And maybe some of the area where I think some ramp up is happening. So maybe regional level you may see some kind of demand supply mismatch. On an overall basis, I think is going to be the same as it was before. And in our market, we are sure that I think we are going to retain our market share, and is not going to mismatch in demand and supply too much in our market where we operate.
Okay, thank you and all the best, sir.
Thank you, Sean. Thank you so much.
Thank you. Participants, you may please press star and 1 to ask questions. The next question is from the line of Uttam Kumar Srimal from Axis Securities Limited. Please go ahead.
Yes, sir. Good afternoon, and thanks for the opportunity. Sir, what would be our closing capacity on a standalone basis in FY26 and FY27?
FY26, I think on a standalone basis, I think we'll be adding 1.35 million ton only. right, Rajesh? So this is what the addition as far as FY26 goes. Okay.
And sir,
FY27, maybe during quarter 2 or quarter 3, we'll be adding this Durg and Prayagraj.
Durg and Prayagraj.
Right? So
Okay.
that activity you can see about 2.5 million tons. 1.2 into 2, 2.5 million tons.
2.5 million. Okay.
2.5
Okay, sir.
plus 35 is about close to 4 million ton we'll be adding as per the plan we have today. Maybe, if we can really, take up some other projects also, this may go further up.
Okay, sir. Okay, sir. That's all. Yeah, that's all from my side. Yeah. Thanks.
You may press star and one to ask questions. Anyone who wishes to ask questions may please press star and one now. The next question is from the line of Nihar Dave from IIFL Securities. Please go ahead.
Hi, sir. Good evening. I hope you can hear me properly.
Yes.
Yeah, good evening. Yeah, very much.
Okay, great. Sir, congratulations, sir. You had a very good set of numbers. I just had one question, sir. What can you tell me in terms of regional revenue split and regional volume split? What is it now, and once our capacity comes online, what do you expect that to be by let's say 26, 27?
So you're talking about regional play, right?
Yes.
Yeah. So whatever information we have, I think capacities are going to be added in East. So
Okay.
I think there, I think capacity is going to be added in East, and if you look at East demand also is the fastest growing market. Even last
Yes.
quarter also the demand was highest in case of East, right?
Yeah.
So capacity is going to get added. I think dynamics is going to be more or less same, not different than what it was before. In the West, I think I do not see that till FY27 is going to be a major change. Whatever we can see today, right? It's going
Right.
to be like that only. Maybe I think demand will go up, and then maybe I think capacity utilization will go further up. So that will happen in tandem with the demand. But not much of a change which we see in West. The market where we operate, I'm talking, right?
Yeah.
North, yes, capacities are on the anvil for some of the players. But as you know that North is a place where from I think supplies are going to some other market, right? So there has always been excess capacity in North, because North supplies to other markets like Central India to far North India to UP West and so on, right? So
Yeah.
it's not going to be a major change in terms of a regional play and in terms of competitive intensity. Definitely, I think people have assets, so they'll try to utilize their assets to the extent possible, and to that extent, I think that might have some temporary impact on pricing during low demand months. Otherwise, I think it's not going to have much change on the dynamics of demand and supply.
Okay. Got it. Noted, sir. So West you expect to be more or less as is. East is a growing market.
Capacity ramp will go up, and so is the demand. So I think more or less, I think it's going to be a semblance.
Okay. Got it. Thank you so much, sir. Thank you so much.
Thank you. Please press star and one to ask questions. The next question is from the line of Shauvik Chakraborty from Dolat Capital. Please go ahead.
Yeah. Hello, sir. Thank you for the opportunity. Just wanted to understand, the pricing scenario for the industry right now, maybe from the exit of January. I mean, considering the recent hikes that we had seen, from the end of December, maybe can you just help me, to understand the dynamics of the pricing front?
So Pricing definitely goes along with the demand, and if demand is good, then prices are going to get reinforced. So that is for sure, and that is what we have seen in case of December and January. Whatever pricing movement has happened because of the support of the demand, right? And at least in the next 2 quarters, definitely I see that demand is going to be good, and hence prices are also going to be reasonably all right. Okay. Yes, during monsoon there is, as I said before, just before this, your question, that during lean demand, yes, there could be some pressure on pricing. But I think if demand is good, then prices are going to be in alignment with that. And that, applies to all markets wherever we operate.
Right. Got it. Thank you, sir. That's all.
So, then you are not going to get, something which is, unusual. This is what I see. Kind of demand supply equation, and hence the pricing is one of the outcomes of that.
Right. Okay. Thank you so much, sir. All the best.
Thank you.
You may press star and one to ask questions. The next question is from the line of Rajesh Ravi from HDFC Securities. Please go ahead. Mr. Ravi, I have unmuted you.
Yeah. Hello. Am I audible?
Yeah, very much. Please, Rajesh,
Hi, sir.
go ahead.
Sir, you mentioned during when premium cement volume overall 11% of the volume total sale, which I adjust for trade volume, this would work out to be 19%. In the preceding quarters, this number was maintained at between 25 to 30%. So, is there anything sharp change in sales strategy, or how come this premium cement as percentage of trade come down so sharply?
I think our premium share in case of East is not very good. And as I said that we are also working on streamlining our brand and changing the positioning also, right? So that had some impact on this. Yes, your observation is right. But perhaps I think in coming quarter we are going to go back to the same level. Because we have done, what we have done is, in East also we have done some kind of, brand restructuring. Because we have, Pro Plus as a premium product here in this part of India, like and this part, there we have the base product. So some kind of realignment we have done, so that, pan India we have one, brand architecture and similar kind of value proposition for different brands. So this is a temporary thing, I would say. Yeah.
Okay. Great, sir. That's all from my end. Thank you. All the best.
Thank you.
Thank you. You may press star and one to ask questions. The next question is from the line of Amit Murarka from Axis Capital. Please go ahead.
Yeah, hi, good evening. Thanks for the opportunity. So, my question is on Sirohi. I believe the limestone there is going to expire in 2030. So, what's the plan there? Like, how do you plan to kind of manage the transition when it happens?
Yeah, so I think auction is due in the year 2030, and this is the case for Sirohi, and this is the case for some other locations for other companies as well, right? So definitely, I think we definitely want to retain this, during re-auction also for sure. That may entail to kind of increasing cost a bit, because in re-auction, what will happen, I think that we need to see. So this is what the case is, and parallelly we are also trying if we can, because we do have that limestone reserve at other places. I think Udaipur and Nagaur also we have taken that, though I think we are in the process of kind of executing all those initial stages of land acquisition, environment clearance, and so on and so forth. So that is the backup, but that may not work on a long-term basis. But we are, I think, reasonably all right that, that mines, when it goes for re-auction, will definitely try to retain it.
Sure, but just trying to understand, in case, let's say the mine premium goes very high, or for whatever reason, if you don't get the mine, then what is the backup plan for the plant then?
Backup, as I said, it's not all about, cost benefit. So, premium which we are likely to pay for Sirohi re-auction versus maybe bringing, limestone from some other place. So that, cost analysis has to be done, right? Because we do have, limestone source from other locations, which is not quite far.
Okay, but and which mine would that be? Like,
Udaipur is the nearest one.
Okay, from there. Okay. Sure. And also, on generally, the outlook on pricing, I believe it's bottomed out after the monsoon, but still, like, it's been a bit up and down in the last couple of months as well. So, what is generally your expectation on the industry competitive intensity and the pricing outlook?
So competitive intensity, yes, of course, I think is going to be there, and it was there before also. If demand supports, then I think prices are not going to see that level of bottoming up which we saw in the quarter two, right? If demand supports, then definitely I think it's going to be reasonably all right and roundabout, I would say. I am quite optimistic that since demand is likely to be good in the coming year, FY26, which is about 7 to 8%, prices also are going to be reasonably all right. Because see, quarter one, quarter two was exceptional this year because of general election followed by monsoon, which is, prolonged little longer, and heavy monsoon in some of the areas where we operate, right? So that impacted. But in the coming year, I think there is no such kind of, major events which are going to happen, which we can foresee today, right? Demand is likely to be good. If you look at, the budget also is a capex of about, 11 lakh crore, 11.21 lakh crore. And out of that, half of that is going to be in areas where, cement is directly related. Indirectly, I think everywhere, but directly related. Suppose, about 1,70,000 crore in, national highway, metro about, 35,000 crore, and urban housing, rural housing, 120 additional, airport destinations. So I think all these projects which did not, take off, or some of the ongoing projects which did not, take that steam, is going to really be on the fast track in coming months and coming years. So demand is going to be good, and that will support pricing. So I am reasonably confident that pricing is going to be better than what we have witnessed in quarter two particularly.
Sure, understood. And lastly, on cost saving, are there any projects going on for you which will commission maybe in some time?
Sorry, I missed something. Sorry, missed you.
No, I was asking on cost savings side. Are there any projects which you are doing, either AFR or WHR or anything like that, which will commission and give you some savings on the next year or so?
So, as I said, some gentlemen asked this question. So one is, of course, renewable energy, which we are working on, further improving our renewable energy proportion, part of our portfolio. This is one. So that will give some saving. Second, we will be ramping up our, TSR at Udaipur, because we have already commissioned that AFR capability, and we'll try to take this, TSR up at that place. In Sirohi also, we definitely see a percentage or two further we can improve with the given, capability which we have. So that is another headroom which we have. And these are the major item, I would say, other than all those, ongoing things. We are working on, fixed costs also, fixed cost reduction, wherever we see opportunity to reduce that thing. So we have taken some action in the past. We'll take some action in coming months and years also. That is another thing which we are working on. And supply chain efficiency further, maybe because now we have, railway at Durg, then the railway wagon loading at Udaipur. So that is going to benefit us in further, improving our supply chain efficiency, being able to serve our customer better, and also reduce our distribution cost. So these are the major items, I would say.
Got it. And if I may, just the last question. Now, on Udaipur, what is the expected timeline for the completion of the merger process?
I think our jobs are almost over. This, wagon loading, cement wagon loading is now getting commissioned. We have already started commissioning that. Apart from that, all, minor jobs like, AFA shed and, some, raw material shed and things like that, we are working on that. Otherwise, all the major jobs are over.
No, I was asking about the Udaipur merger. If it was already discussed, I missed it. But what is the timeline of completion of the merger of Udaipur Cement into JK Lakshmi?
Yeah, merger, we already have the stock exchange SEBI approval. We have approved the NCLT, and that may take about 8-9 months.
Okay, so maybe end of this calendar, maybe roughly.
They're targeting that.
Got it. That's all from my side. Thank you very much.
Thank you.
Thank you. Participants, you may please press star and 1 to ask questions. You may press star and 1 to ask questions. Ladies and gentlemen, this will be the final reminder and no further reminders will be given, that you may please press star and 1 to ask questions. Ladies and gentlemen, I now hand the conference over to Mr. Vaibhav Agarwal for closing comments. Over to you, sir.
Yeah, thank you. Sir, I had a question for Arun sir. Last time on the call, Arun sir did mention that in the next call he will be coming back with some newer strategy regarding branding and something on that front. So anything, Arun sir, which you would like to throw some light on this call?
So that's whatever I told one of the gentlemen, because the brand rejuvenation which I had promised before that we are working, so that has come to that execution level now. So we have launched a new brand called JK Lakshmi Green Plus. So we have launched on 14th of January this year, and the initial feedback from the market is very encouraging. So one, I think our commitment towards greener product and greener environment, so that was one of the motives. Second was also to improve the positioning of our brand, which we have done. And we definitely see that now this brand rejuvenation exercise and brand repositioning is going to benefit us in many ways. One, of course, our very strong commitment towards greener product, greener environment with this Green Plus. And second, also in terms of improving pricing positioning, that will kind of further give benefit in terms of our bottom line. So that we have done, and some of the brand restructuring, because there were different brands in different geographies with different kind of positioning and value proposition. That also we have aligned in all our markets. So pan India, we have now across one brand architecture, and each and every brand has similar kind of value proposition for different markets all across India. So it's quite a mammoth exercise, and we are almost into about 1.5 months into this, and the encouraging feedback we are getting from the market and our customers. So hopefully, I think things are going to be turning out well for us as far as our objective goes.
Right, sir. Sir, also one more question I wanted to ask you specifically, that over the last couple of quarters, especially our numbers have been a little volatile versus relative to what our peers have reported. So since you are taking now so much of initiatives regarding branding and several other stuff which you mentioned in the call. So relative to that, from here on, where do you see your numbers getting better? So I'm ignoring the pricing aspect, but on a relative basis versus peers. So do you think so that in next couple of quarters you can come at a par to industry leaders in terms of profitability, or you will still be away like 100, 200 rupees? And if that number will sustain as per your assessment, that gap only, or it will fluctuate like the way it has been in the recent past?
So we have definitely bridged that gap of Weber, that, and all of you, because you track each and every company very closely. So we have done a substantial job over the last couple of years. There is no doubt about it, and that is also reflecting in the gap which we have with our peer group. Now, one thing I would definitely want to request all of you, when you compare our result with others, I think let's compare like to like, grey cement versus grey cement. Based on your input only, we have also done grey versus grey comparison. Because see, if you are going to compare apple with banana, then I think it's not going to be good. So we do not have any incentive with us. We do not have other than grey cement with us, right? I think based on those parameters, all of you should and all of you are learned people and kind of doing a detailed analysis. I think I would really love to really see that grey versus grey and like to like comparison. Where are we? We have done our own calculation, but when I see, I think I am not far behind. I am absolutely not far behind. I am as good as what you call that best in the industry. And if you meet one to one to me, I will explain you why I am saying so and what kind of analysis I have done. And similar kind of things, if it is coming from you also, that will really help us and give some insights as to where we need to further work on, right? Otherwise, if you keep on comparing banana to apple, I think this is not fair.
Right, sir. We'll discuss that in person, sir. I will look forward to that. Thank you very much, sir. And on behalf of Philip Capital India Private Limited, we'd like to thank the manager J.K. Lakshmi sir for this call, and also many thanks to the person for joining the call. Thank you very much, sir. We are now concluding the call. Thank you.
Thank you.
Thank you, members of the management. On behalf of Philip Capital India Private Limited, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Thank you.